What's going on, guys? Today I got Lourdes with me. We're going to be talking about having multiple VA loans from the perspective of both from the financing side with the VA loan and from the real estate side. Because, Lourdes, I know you wanted to talk about this topic. What's going on with people out there? What questions do they have?
Yeah, so we're seeing a lot of people that are locked in, current VA home owners that are locked into their 2-3% interest rate, and they want another property. So they want to know if they can purchase another property using the VA home loan, and what does that look like?
That's awesome. And also, a lot of people are downsizing, right? So we've talked to a lot of people, and from my end, I get these questions all the time where, it's what is it that you do, right? Do you rent? Do you sell it? And for me, you and I are very different in the sense that I like having a single family home. I don't want to deal with tenants. You have a multi-family and you want to have like 1,000 houses, right? So we're gonna come from it from both perspectives, and I'm also gonna walk through how that program works with the VA home loan, so you guys get a good idea. And Lourdes is gonna break it down to us from a real estate perspective. So Lourdes, eh, eh, what's like kind of like the first step that someone is gonna take when doing this analysis? Like, what is it that you need to do first?
So the very first thing that you have to do is look at the rental potential for your property. So what you take is your mortgage, your taxes. Now, if you're in a state where the tax exemption is in place, you do have to count the taxes so that you know what that all-in payment is going to be. So you take taxes, principal and interest, and then the homeowner's insurance. And if you have a HOA, you also factor that in. And then you look at the local rents to see what other properties that look just like yours are renting for. Then you're going to see that number. And if there is a cash flow, meaning the expenses of the property supersede what the rents are going for, then it's a good investment. Now, if it's the other way around, where you may have to be paying a couple $100 a month to keep it, it might not be the best option. What is your take on that?
It's interesting because I'll talk to people that are like, I'm willing to pay up to $1,000 negative equity every month. And there's, you know, I'm not a financial advisor, right? We both own places.
Mhm,
It depends on what your situation is, because in theory, Lourdes, you can write off that loss, right? That's one part.
mhm.
But you might be in such a desirable area, or that area is transforming, that hey, in 5, 10 years, it's gonna outpace it. You're gonna make up that money that you put in, and you're gonna make it up with the equity, right? Because let's say you got a $600,000 place, you're 1,000 upside down, so you're spending about what, 12,000 a year. So talking about average appreciation, it's about 2%. Like, that's on the low end, right? But this is just historical. That's $12,000. Okay, so just think about that, right? So that's why you got to really look at the numbers and what makes sense. But for you, it might be like, well, I can't lose 1,000, but then something happens. Now I got to pay even more money. So that's going to kind of factor into that. Plus, it's got to be based on your financial picture. Because if you don't make enough money to do that, well, then selling might be a better option, right?
Mhm.
But that's a good first step to be able to analyze what that is. Now, but what if but what does it look like to be a landlord? A lot of people are scared of that. They're like,
Yeah.
"Hey, I'm PCSing. I'm on active duty. I'm moving to Europe. What are these clowns going to do with my place?" So,
Yeah. So that goes into the next thing is what is the best strategy? Is it short term, midterm, long term renters? So identifying what fits your best needs. Are you okay with, like, are you going to be local? Or are you not going overseas? Can you manage something like a midterm, short term rental, like an Airbnb? And you have to also look at the restrictions from the city or the county that you're in, because across the nation, there are stipulations. Some areas do not allow Airbnb, period. So, really looking at those and diving deep into the analysis. If this is your target area, can you even do this? I moved into a city that didn't allow Airbnbs, they didn't even allow a roommate. Like, you can't even have a roommate. I'm like, how can you tell me I can't have a roommate in the house that I'm paying a mortgage for? So I quickly left that little city that I was in and went to one where I had a little bit more leeway. But then the Airbnb restrictions started to come on, and I am an Airbnb host. So then I started had to deal with this battle. So definitely be aware of like what's going on as far as the laws, what you can and can't do. Then you start to go into, is this, if you're targeting long-term tenants, is this an area where it's going to be appealing to long-term tenants? Is that going to, what's that going to look like? Is this an area where subsidized housing like a section 8 voucher is more predominant? You want to make sure that if that area supports that, then that's your strategy. So you have to go into the wayfind details to figure out what the best method would be. And if you need help with that, I can definitely help you with that, because I've been an investor for about 3 years, and there's a lot that goes into it, and every situation is different.
Yeah, definitely. You guys drop a comment down below. Lourdes will go in and answer any question you guys have. And if you want to schedule an appointment with me, you can as well in the description. So yeah, Lourdes, there's a lot of factors that go into that, and it is so important to understand the dynamics of a city, a village, or the county or the state. Those laws can change. So you also have to be ready to pivot your business if you're thinking, hey, this is going to be an investment property. Because typically, what do you see, Lourdes? Like the Airbnb model makes more money than the long-term model, but maybe not as much as the midterm. Like, hey, oh, you might have like traveling nurses or something like that. So all that's going to be factored in, and you really need to talk to a professional that knows the area to do an analysis and help you walk you through that process. So, Lourdes, yeah, thank you
Perfect.
for that piece because it is so important. Um, and do you see people more self manage or hire a property management company? And if they do that, what does that look like? And how much? Because they're like, oh, it's a fortune to do it. I'm not going to make any money. Like, what's the reality of that?
Yeah, so it just depends on your strategy. So I'll give you an example. I have an Airbnb and I have a management company. So there is management companies for Airbnbs. There's management companies for long term. So whatever it is that you want to do, there is management for that.
That's awesome.
Yeah, so it's great. So my for a long term management, you are looking anywhere between 6 to 12%, just depending on how hands on or off you want to be. And all this is specific to that management company. So they'll be able to tell you like all the services they provide and see if it's going to be a good fit for you and your current lifestyle. And then there is management for like the Airbnbs where they handle everything from the bookings to the payments to the, hey, the toilet's not working at 2 o'clock in the morning. They have someone on staff that would come take care of that.
Oh, wow.
So they take care of everything, and they're on the higher end. So for short-term rentals, you're looking anywhere between 20% to 30%, depending on how hands-on and off you want to be and what they all do. So that can be another option, especially if you're traveling or you're moving out of state. That would be a good option to have.
Yeah. And for some people, having that ease it makes a big difference or adds to that decision. Because that's a big thing right now with people that have the lower interest rates. They may have a lot of equity built up in their homes,
Yeah.
right? So the rental market will most likely make sense, right? I'm going to say that with some confidence because if you have 300,000 in equity, guess what? Rental prices have gone up a lot. Okay. So you really need to dive into it to just, again, kind of see where it makes sense. Plus, that money's working for you because now someone else is paying your mortgage. And let's transition to having multiple VA home loans. Okay.
Yeah.
Because you can use that. Hey, I'm making it. And we see a lot of people. So I'm not like making this out of thin air. $1,000 a month on my current property, and I could take that thousand and apply it towards my next property. So multiple VA home loans. Yes, you can have them. You can have unlimited VA loans, but let me explain a couple things. I'm going to explain it Barney style so you guys understand it. Your VA home loan, there's two tiers of benefits. Tier one benefits go up to $144,000 of purchasing power, and that equates to 36,000 of entitlement because the VA guarantees a quarter of it. That's your original benefits that the VA home loan had. I didn't think it would go over 144,000, but you can't really you could buy a modular home for 144 maybe.
If that.
It's just gotten so expensive, in the sense of just prices have gone up a lot over time. And then they had a new rule that says, hey, you can go up to the single family loan limit. That's why people, even the other day, someone's like, "Well, the area is limited on the V loan to 806,500." I'm like, "What are you? That's not real." But still, realtors and other lending professionals will still say that. That's wild.
Yeah.
So if you don't have an outstanding V loan, right? So then they passed another law a couple years ago and said, look, you don't have an outstanding V loan, there's no limit. You want to buy a $5 million single family home, not put a penny down, you could do that with the VA home loan. Now, the challenge is when you want to have multiple VA loans, you have then a cap on the single, and it's based on the single family loan limit for Freddie Mac. So right now it's 806,500. So give you quick and easy math. So you bought a house for 406,500, right? Subtract that from the 806,500, and you have 400,000 left. So you have 400,000 left of entitlement to buy another house at 100% financing. That's crazy. And anything over that requires a 25% down payment on the difference. So, with an example, 500,000 purchase, you have 400,000 left in entitlement. You have a spread of 100, 25% of that 100,000 is a 25% down payment. Now, taking all that into consideration, we have a whole video on that on the channel called Multiple VA Home Loans. Check it out because it dives in like how to search for your like the Fannie Mae AMI area, and you can determine how much is in each area that you have, and it changes every year. Now, you could use your VA loan and use none of your entitlement. This applies when you do a 25% down payment because you did the VA's job by putting 25% down. So let's say you're using the VA loan for the first time. You do a 25% down payment, you still have your full entitlement because you used the VA loan, but you didn't use your entitlement because you covered that 25% down payment. So it's a powerful tool to utilize. And Lourdes, a lot of people too will be like, I don't need the VA loan. Maybe like a lot of our older veterans, like I already own my home outright. But lately, what this may be a little bit off topic, but it's powerful, is that, I recently had someone that said, look, I paid off my house, but I want to buy my child a home. Well, you could do a cash out refinance and use your VA loan, take all that money out and buy another house cash. That's huge. So,
Yeah.
but yeah. So yeah,
That's
so Laura's so looking at kind of how people could really leverage that piece, right? I mean, when they get pre-approved or pre-qualified, they get numbers like, hey, this is kind of where the market rates are, what the payment is. And then lenders can offset those payments on a departing residence as well, right? So as long as you provide like a CMA, competitive market analysis, then as long as it's more than what they're paying or close to it, at least like as long as it's over, then they can offset that payment. So that's another positive part. You can offset your departing residence so it doesn't count against you, and buy another property. So it's again, it's a pretty powerful tool.
okay. And is that lender specific as far as just providing a CMA? Because I've had some other lenders that say you need an actual lease to um to offset that mortgage. Is that a lender specific thing or is that a VA thing?
Loris, I know we had that come up because you reached out to me on something similar to that, and the VA doesn't have that requirement, but some lenders will have overlays to what the VA handbook says that it can do. So that's the one downside that you really have to kind of find out, which lending institution will be able to do that.
Okay. Great. Thank you for that. Because I did have that situation come up.
I know.
I'm like, "David, what do we do?" So we had to quickly find a tenant, and it was, like, a mess. We didn't really have the time to screen it out, so yeah, not all lenders are equal. So,
Yep, yep. That's why you can
um
ask those questions, right? And it's like, Lord, is how many crazy amount of times we have it happened to you where the lender's like, oh no, you can't have multiple VA loans and you have to sell your property. So this is why we do the videos, because this doesn't just happen to you, the folks out there. It happens to us, right? And this is why we do this, because we don't want to sit on the sidelines. We want to be proactive on getting information out to you
Right,
so you can leverage the VA home loan like we did and a lot of other veterans, but it's still insanely underutilized. Only 13% of veterans ever use the VA loan.
yeah, a lot of them just don't know about it, or they
Yeah.
don't know that you can use it, over and over again,
Right. Or they something
at the
get
same time.
expired and they used to have an expiration. They don't anymore. So you're retroactive. So if you got out of the military in the 60s, you still have your VA loan, even if you've never used it. And guess what? There's no time limit. So if you're 99 years old, you can get a 30-year mortgage from 18 to 110. It doesn't make a difference. If you're alive between that, then you can utilize the VA loan if you're eligible for it.
Okay. So I do have a question, David. Say I purchased my very first property with a V home loan. I didn't know, and I was told by my lender that I couldn't get the next property with a VA home loan. So I used a FHA loan. And now I want to purchase, now that I know that I can stack my benefits, I want to purchase another property. What is the process with that? And then can I use the income from any of my properties to qualify for a new one?
That's a good question. So now we're talking about having multiple properties, right? So if you, well, like I mentioned earlier, like if you have a primary residence and you're leaving it, we just do offset it with a competitive market analysis. Okay. So that's like if you have a single family home, pretty straightforward. If a multifamily, a little bit more complicated because it could only offset one unless you could show a rental income history to offset that. Now, the way that lenders look at it is we're going to look at the last 2 years of tax returns, and you want to have full 12 months of rental income on that property so a lender could utilize that as income. Now, it's not straight line math. Then what I mean by that is like, I know Lourdes, you own multiple, multifamilies, so you know what I'm talking about. You collect 5,000 a month on rental income. Let's say you got a 4 unit, 5,000 of that is income, right? You're taking it to the bank, telling the lender, I make 5,000 a month, and that's what we're going to use. Lender looks at it because we look at this all the time. We're like, you said 5,000, but you make negative 2,000 a year. How is that possible? Well, David, I got expenses, I got things. And I'm like, well, guess what? All those things get deducted. Normally you can add back
Mhm.
depreciation. Okay. So that's a positive. But that's the beauty of owning multifamily is you could expense as much as you want. Nobody wants to pay taxes. And a good accountant's going to be able to help you with that, right? As long as it's legal, they're going to be able to help you with that process because they can advise you, right? This is why I recommend, I'm not telling you that you need one. I'm not an accountant, but get a CPA, right? If you have multiple, if you're getting a multifamily, because it does help you with that process. But yeah, so you really need to be careful when you file your taxes to make sure that you get with a lender, especially if this may be your first year, but you're
Yeah.
thinking about doing something in like a year and a half, 2 years. You'll want someone to review it to make sure you're on the right path. Otherwise, you're going to be trying to do something. Now you got to amend your taxes, and it becomes a nightmare. So that's a good question, Loris, because a lot of people get tied up with that. It's tax season right now, anyways. So I'm sure, like in 2 months, people are going to be like, "I filed my taxes, David. Take a look," and I'll be like, "You did you." Not saying you did it wrong, but you didn't consult with anybody that could walk you through how a lending institution is going to look at it. It's like same thing with self-employed people. They're like, "Oh, I make 110,000 a year." I look at their taxes. You made 12,000 last year. What happened? Oh, I have expenses and this and that. And I'm like, well, again, we're looking at bottom line taxes. If you're not paying
Mm.
Uncle Sam, we're not using that as income. So
Right.
yeah, but
Yeah.
but
So
good.
thank you for that. Cause yeah, I've been getting that question. Like, what do we do in that case scenario? So just to kind of bring it back, when you are looking and you are in the situation where you have your home and you're seeing what are your options are, definitely looking to make sure that it cash flows and also checking your taxes just to make sure that your expenses don't oversee that and you're not at a negative because that's going to count against you. Then you're going to determine like what's the best strategy as far as long term, short term, midterm rentals. And midterm rentals are, like things like traveling nurses, 30 plus days, anywhere between 30 days to about 3 months typically is the rotation on that.
Yep.
Is that going to be the most ideal? And there are different websites that you can look at all these. And we have a video on how to purchase a multi unit using a VA home loan on our channel that we go in more detail with that, which is great. And then also knowing the strategy, how soon can should somebody talk to you about their finances and their next steps and their next plans if this is something that they're planning on doing?
So if you're serious about doing something, I would say there is really no limit, really, because if you are thinking 6 months out, it's a good time because you want to know like you're making big life decisions. Are you qualified to do what you want to do? Do we need to change something? But
Yeah.
the same thing goes if you're 2 years out from buying a home and you're like, hey, I'm going to be back in this area. What, based on my specific situation, where do I need to be to do that? And a lot of times, Lord, is, we come across that where people wake up and they're like, I found the house. I've been waiting. I've been watching every night on the app because that's what I do. And that happened to me, but I do this for a living. So I say that's my excuse, right? I'm like, look, I found a house. We're buying it now. And I'm
I
like,
want it
literally,
now.
that's how it happened,
Mhm.
right? But I
Right.
look at my finances and I budget. So that's what you have to do, right? To be able to do this. Um, but normally you don't want to wake up, find your dream home, go look at it without being qualified,
Yeah.
and then on a Saturday night, I get a phone call. David, I found the house. I found your information online. Help me buy it. And then we're spending till midnight getting everything ready, and then you don't qualify. You don't want to be in that spot because there's a lot of emotion with buying a home.
Yeah.
Lourdes, I mean, what are reactions from people when they don't get the home that they want, when they think they're like going to be under contract, and then they get denied because they weren't qualified correctly. Like what are those feelings
Ooh.
like?
It's not good. It's definitely a wake-up call. Some people will be like, "Okay, cool. I'm gonna fix these things and then we're gonna recircle back," type of thing. When you start to get in the process of looking for a home and, you have to manage your expectations. Like, what are you gonna get for the budget that you qualify for, if you even qualify? I think
Right.
it's imperative. If you remember, I woke up one day and I was like, "I wanna buy a multi-unit." And I came to you and you were like, "Yeah, okay, it's gonna take you 3 years," and it took me 3 years to get
Yeah.
it because I had to show 2 years of, income, blah, 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 whatever, because 'cause I'm 1099 and I refuse to get a job, number 1.
I mean, you have a job, but not
So
like a W-2, right?
yeah,
Self-employed, right? This is kind of
yeah.
the key.
Okay, thank you for that correction because I was like, "That didn't come out right." I'm like, "No." But yeah, so it took me 3 years and I had a plan, and anytime I was making big financial decisions, I would call David, and he's one of my good friends. I consider you as a brother, but still, I'm like, "David, what should I do?" And, like, poor David was like, "No, don't do that," and he would guide me the right way, but it was very important for me to make that transition because I was able to achieve, a dream that, I thought was just a dream. Like, I didn't know it was going to become a reality until I sat down with someone to actually like put all the pieces together and say, you need to do this, this, and this. This is how you can use your VA home loan. This is what you can't do. All the rules are there. So when I got to the point where like, okay, I'm ready, I was really ready. So I want to say thank you for that, David.
No, thank you, Lourdes,
You
for
had my
the
dream come true.
well, because it's like a lot of I think a lot of people you don't realize that they could achieve that home ownership piece. And again, it's not for everyone, right? Some people come later to the game than others, right?
Yeah,
And people, will cite the economy or this or that.
yeah,
So, historically values go up, Lourdes, right? And your
yeah,
dreams get more expensive over time. It's about how do you get yourself in a good position today to set yourself up for home ownership down the line, right? It
right.
doesn't make a difference on that. But Loris, I'll let you wrap it up for this video. What are your final thoughts on this?
So my final thoughts is review the numbers, talk to professionals, get in a position to where you can really strategically use your VA home loan to create generational wealth. I always say if it makes sense, like definitely, if you're doing getting cash flow, you are also building equity in your home as well that you can tap into to go get more properties if that's what you desire or retire earlier. So this is definitely a great way to create generational wealth and to reach out if you guys have any questions because we're both here to help and assist. I know I've been having a lot of strategy calls lately, but just long-term planning for many investors. So I'm excited for that.
That's awesome. Well, thank you, Lourdes. Thank you, everyone, for joining us. Please make sure you guys drop a comment, like the video, share it with the veteran community because we need to educate each other. And if it's not just for you buying, looking at it now, but there's so many veterans that have questions, surviving spouses in general, right? So please share the information. We'll catch you guys on the next video.